All right, guys, we're hopping into our final pre-weekly call for 2022. We do have, like I said, the main events for the week are going to be US CPI on Tuesday, followed by FOMC and Fed funds rate on Wednesday. So let us hop in. Let me delete some levels, clean up this chart real quick. So last week's analysis was this weekly or daily opening gap as high of the week, which we got. And I was expecting a little more downward expansion that we didn't get. We did get a little bit, but Doji close, obviously we're creating liquidity for this week. This is going to be the final real week of the year. I do have a couple scenarios in mind that I'll take you guys through now. So I want to talk about the 3-month candle here. We have the quarterly candle. As you see, we only have 19 days left. So for me, we're looking at power of 3 potential. I'm kind of looking for like a purge and revert of the lows as our potential. We do see we have this quarterly gap that we are still respecting. And by respecting, I mean price is staying above that. So I'm actually going to annotate this level here. Hop over to the weekly. I don't need this. Right? No, I want this. That, okay. So yeah, so in terms of the week, I still do want to expand lower, but I think we have to distribute eventually this 3-month candle. As you see, we've obviously had just the entire time just downward expansion from the open, which is October. So here is your quarterly open candle right up in here. So there's really no accumulation above, short-term accumulation above quarterly opening price. And then we've been distributing price this whole time. I mean, or just moving smart money direction this whole time. So I feel like we need to come up come the end of the year. So I believe FOMC week or this week will be the thing that takes us to this liquidity. And below this, we have this imbalance inside this order block. So this is our weekly order block here, paired with our weekly fair value gap right below sell side liquidity. Now, as far as how I believe we'll get there, this dash line, 1 second. Do I need this? Okay, I'm gonna move this over because this was an old thing. I believe we'll get there. I believe that price could come back up if we want to. If Monday wants to be risk off, right? We want to come back up and look into these areas, or possibly even tag into this one more time. I believe we're gonna get something like, where's my, something like this, and I'll shrink down timeframes to take us down here. And this line is our liquidity, and here's our fair value gap below liquidity, and this is the order block high. So I believe we're gonna come into one of the, either the liquidity area or the fair value gap area. And then we're gonna start to distribute price. By distribute price, I mean, I don't know where up in here, but off of these zones, I'm gonna be looking to come back up. Something like this. Now let's go into 12-hour chart, see if they left us anything. There's really nothing like unmitigated or left behind. We have a breaker here, candle closes respecting it, wicking into this 3 drives, 2 of them into this fair value gap, displacing lower. 4 hour. Yeah, there's really nothing that I fancy right now that we can be drawing higher into. Really, it's just, we have this order block here. This just seems too close to put in our initial high of the week. So I'm not really going to be worried about this too much. There's visibility for, let's go back to the 12 hour and then the daily. It does line up with this daily gap. And we'll take this. Looking for this. Like I said, liquidity or fair value gap, either one, and then distribute the candle. That's what I'll be looking for. As I've been mentioning via the Telegram, I do believe prices being displayed, like just driven lower repetitively to create liquidity for these events, which just seems, logical because price has been pretty one-sided recently. We think pivot's coming. Quarterly shift happened for the fall. We had our bullishness. That's another thing I do want to mention. Quarterly candle. We purged last quarter's low and then displaced higher. So could we be distributing the quarterly candle already? Absolutely. But I don't think the local high will stay for this quarter. I think we'll hit this one more time and then distribute again throughout the holiday season, and, to open the year. Let's do this. Let's start this by, okay. So where could our, POI be for either CPI or FOMC? I don't know, like CPI could take us lower, whether we come in, above expectations, because our PPI did come in hot, nothing crazy, either 0.2 or 0.1%, I forget, but nothing like, crazy. But, we're in this sub model right here. So SMR completed, fair value gap respected, rejected. So now we're looking to go lower. So for me, the draw is going to be, and I had this a while ago. We just, we had some delay in getting there. We had this last hit on liquidity before our shift. We have no, actually, yeah, we do have closes below this swing low. So that's strong shift change in delivery. So eyes on this order block inside this order block here. I wouldn't call this a propulsion block because it's not above it, but this is one order block. And this is just the refinement. We have displacement here, creates another one, another order block. So this is going to be where I think price could be going. I don't know if all of you follow me on Twitter, but on Twitter last week, pre-market, but after NFP, I said if I was making NASDAQ, 11,300 and 12,600 would be where I'm looking, and I'm still looking at that, so this is a decent range. I'm not going to say it can't be. So this realistically, this could be Monday, and then maybe CPI takes us down. Monday could be a small day, small range day in anticipation for CPI Tuesday. Tuesday take us down. FOMC could hit us once more, hit the sellers one more time prior to FOMC, so after Fed funds rate, but before FOMC, and then the second wave of FOMC could take us back up if they say that we're close to a pivot, and that the rate hikes will be ceasing. So pay attention to FOMC following the Fed funds rate, because the guidance given there will be the direction the market picks. But as for the path, we're looking here into this area, like I said, and then back up. And this high will be, in my opinion, taken out this week after this. So let me take a picture of this and this real quick. I don't remember if I took this. Gotta make sure I have it to send out to you guys. All right, let's hop into NAS. So NAS has been like the easiest bearish case out of everyone, because it's just refusing to move. Sell model off of the monthly fair value gap low. Steal this over here. NAS, same case. So here's our range, right? Even though all this liquidity has been hit, you still have like your 3 drives here. Discount still hasn't been achieved, so fair value is being sought prior to these news releases. We have the same thing. We have this order block here with displacement here. So it's been repriced here, redelivered, right? So coming back here, can fill it in and balance it. The third delivery will balance it. 1 delivery, 2 delivery, 3 delivery. And then it could be used as a sensitive area to take us higher. But pretty much the same thing. I'll be looking for at least a discount run, BPR run. Preferably, I'd like to see the order block. I did say 11,300, just because it's the easiest target. But I'm not going to say that they can't take us here, because we also have CPI. Like I said, in my opinion, CPI and FOMC aren't going to deliver in the same direction. So in that case, liquidity is going to be sought for CPI. They're either going to build CPI on the opposite side. They're going to take FOMC, as well as purge orders or mitigate orders here. There's smart money supposedly is selling here to buy. Right, so they need to mitigate these orders. This is a mitigation block. They have to come back down here to mitigate these orders prior to taking price higher. But you don't need to know all that. But you do need to know that liquidity needs to be created for these big events so that they can take it and then move the market. And as we see, an example of that is all like same here. Look at these clean highs. All this is LR, low resistance liquidity run. Just lower high, lower high, lower high, lower high, lower high, lower high. Same thing is on SPY. We did come here and mitigate some inefficiency, but again, you still have all this built up liquidity that needs to be sought. And that's also the same thing with our lows. Not hit, not hit, not hit. Well, all this got hit, but these were hit. But these two, let's go to SPY daily. Clean lows. So that's my case. I'm still bearish, high time frame, just based on like the economic spectrum, but Save this. I'm not going to go too deep with Dow. Down again, it's going to be the same case. Smaller range, so we could actually look one level deeper for Dow. Clean this. And by one level deeper, I mean we could use this. That's not the tool I want. So we're still going to be looking at this propulsion block here. And I say propulsion block because this is the order block and this is connected. And by connected, I mean we violated the highs here, validated this order block, and then printed another order block because they're all technically order blocks. They're just different types of order blocks that is touching this order block. So this is propulsion block. As we saw, we already had a sensitive reaction, but what we did is create a liquidity inside of this order block. So one level below the high and open of the candle is the consequent encroachment of the candle. Here. So below the blue box. We have that. But for me, I'm really just looking at that. And then here. Gold, gold, gold. Been loving gold recently. For me, I really have no clear draw right now. So prior to last week's candle, we were operating inside of this range, right? And we violated this candle's high here. So our new range is, so sell side got taken here. As you can see, it's just barely below sell side. And then this took buy side. So this is our new range. We did have IOFED right here, partial mitigation of this fair value gap, spooling higher into this buy side liquidity pool. So for me, I'm looking at swing high candidates to take us actually down into this and rebalance this range, whether that be from the weekly order block. And I think that's like the most logical place to put us. Yeah, so we're also printing a monthly fair value gap here. Wherever the high gets put in, we don't know yet, or the low of this candle gets put in, we don't know yet. So I'd be looking for, this is your first drive, this is your second drive. So a third drive, we have so much liquidity here. So here's your 3 drives higher prior to the shift, displacement, mitigate the dig into this order block and then shift. But prior to us leaving, we created all this right here. All that's liquidity. LR, low resistance liquidity run. So I don't know who here knows the difference, but high resistance, this is a high resistance liquidity run. As you see, all these highs technically have already been hit, on the way in. So you have 1, 2, 3 drives. So this high took this liquidity and this high took this liquidity. So, in theory, this high shouldn't hold as much liquidity as, say, these highs, because every time these highs were printed, they weren't violated. So liquidity was built up here, 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 and this is a swing high and this is a swing high, so liquidity is there. And then this is also a swing high right here that's really small. that's also a swing high. So liquidity is built up there as well. So you have first drive, second drive, potential third drive into these highs. You have 1 set, 2 set, 3 set, 4, 5 swing highs to dig into. So we could be looking at something like this, take some, either this high right here or this high, and then come back down into this range like that. And that's not going to be this week. That's like digging into Q1 as well. So I'm going to leave this up, and I'm not going to alter this unless price gives me a reason to change what I'm expecting high time frame, but this is what I believe we'll be looking at for the next series of weeks. All right, let's speed up a little bit. Clean this up. Don't need this. I'm actually going to pull this over. Here. That's just extra. We have to value that. There we go. For me, we are reaccumulating. And as we know, consolidations don't create reversals. And we are looking for strong dollar and then weak dollar. Strong dollar, weak dollar, strong dollar. So I'd look at this range here, weekly volume imbalance, and then below that, this daily volume imbalance that has equal lows. Actually, this low got taken out here, so I would just be looking here and then at the highs. Pretty simple. EU, haven't been much of a fan of this pair recently, to be honest. GU's kind of had my attention. The daily time frame is much cleaner. Old daily for value gap. This is actually interesting to me. I'd be interested here. I'm not going to say that this is an order block yet because we haven't violated this high. Did we print SMT? Let me put these side by side real quick. GU daily. No SMT, which I like. Let's shrink down real quick. Yeah, there's really nothing here that indicates. So I'm going to be looking at this daily now BPR, but you also have these liquidity pools, and you have a small imbalance actually here. Check the 12-hour. All right, I actually like this. I'm going to move this over. I'm still going to say that the daily for value gap could, stop price, but I do like that we have a fair value gap below the sell side. So this is what we're going to be looking at here. Been becoming a huge fan of our charts recently. Yeah, we really like that. So we have sell side pools around sell side pool here, another sell side pool inside. So that's what we'll be looking at here. Higher. Nothing crazy. GU. GU really been my focus because the daily has been much cleaner. As you'll see, when I zoom out, here. I'm actually doing this on the wrong template. Doing this the one I trade on, not the pre-weekly one I've been doing for you guys that has history, but oh well. Too late now. So it's really just IOFED, creating bullish PD arrays, trading into bullish PD arrays, and then continuing. This is where I directed your attention last week. I said, in this area of stacked bullish PD arrays, I'd be looking for buys. Strong reaction given. Let's go here. Oh. We could revisit this order block. That's what I suspect. Here. Just like this, we also still have this fair value gap that's been respected. On a wick basis here, and then here, wherever the high is. So I'm taking some look at that. But yeah, really simple, not too much, no reason to complicate it. I will look for buys off of this once we're above. So daily gaps. Realistically, you guys can make entire weekly systems. I don't know if you guys been paying attention to my dollar analysis, but daily gaps have been really telling the entire story. So even old ones, as you guys have seen. UCAD. So I'm actually going to pull up another chart real quick for UCAD analysis. Which is oil. This monthly order block is accumulating price. 1, 2, 3. We did have our third drive below. But I'm not going to predict a bottom here. Order flow is incredibly bearish for now inside a bullish monthly order block. So we're just going to say that it's going to continue going down just because it'll be easier. So that will mean, where UCAD is going to be seeing higher prices, despite lower prices on dollar. Look at the candle closures, want nothing to do with this fair value gap. Look at daily bullish daily order block. Yeah, that's the business right there. So daily wants to respect bullish order flow, and those are your signals on where is order flow going. Look at your daily PD arrays. Are we closing inside of daily PD arrays? Are we closing above the extremes of PD arrays? You don't have to use the same ones I do, but fair value gaps, order blocks, breaker blocks. If you want to use 3 and voids, the opening gaps, where is price closing on the highest time frame analysis you do, whether it be the 4-hour, the weekly. What is that candle doing? Are we respecting bullish order flow or bearish order flow? And then you can reverse engineer your lower time frames based on your highest time frame, because as we know, the lower time frames are all subordinate to the higher time frames. So we're gonna say bullish prices. I'm gonna give levels for this. I'm not gonna like it because it goes against my dollar analysis. We're gonna break above, smack into that, and then we're gonna use this wick as an order block or propulsion block rather. I mean, technically, all, like this will be your order block, and these are all propulsion blocks. But we're gonna use this wick as support, and then we're gonna take out this liquidity pool here. And this is just because oil weakness. That's it, not dollar strength. I do have a couple minutes, so I'm gonna stop the recording. And if you guys have any questions, throw them in the chat and I'll get to you.